Good afternoon, everybody. I guess morning still for some, huh? Um, so kind of interesting. I was just kind of looking at a few things here before we started out, and noticed kind of the S&P's kind of paused a little bit. And if you not real familiar with Fibonacci or anything like that, I was just kind of looking at these highs up here down to the lows, and right now we're hitting that 38.2% retracement area. So it's probably why it's kind of hung a little bit today. Um, Above that, I guess they'll try to go up to that, 58.92 on the S&P, which is right there at that 50% retracement, and they're gonna have to, throw a line in the sand. They're gonna bust it or not. But like I was saying just a couple of weeks ago, it is not unusual for them to set lows by the middle of March and then kind of turn things back around. If you all recall that, if you were in here, and here we are. We on the 13th, we kind of hit that low, and now we've kind of ricocheted back up. And so we'll see if it continuous little churning and grinding a little bit higher here. But I'm kind of wanting to see what it does based off of our PCE numbers coming out on Friday, just to see how that is going to mess with the market or not. I mean, that's inflation news. Basically, it's personal income and spending, and that will, is looking at everybody out there either saving or spending, or how much income they're bringing in and all that good stuff. So I'm kind of anxious to kind of see how that kind of pans out. So but that should help, kind of spur things on just a little bit more. There's still a lot of uncertainty out there between, I say, all the CEOs and all that stuff of, they they say that they like the policies of the current administration. They just can't keep up, and it's just driving them nuts. And which, yeah, they came out just guns ablazing, and here they go. So another thing, kind of looking at that as well, and they still haven't gone over, not just there we go. They still haven't gone over and checked out old Fort Knox yet. I'm bringing up gold here real quick. Um, this is a daily chart of gold. You can see it's been on a nice little run up. Um, but they still have our gold valued where it was, I don't know, 50 years ago or whatever it is. And I don't know what that's going to do if they revalue our gold. I don't know if that strengthens it, weakens it, whatever, but it sure will give them a nice boost in revenue for sure. Um, but you can kind of see, well, let's go over to a intraday chart here. Right now, on the June contract here, we're at this 30.55 area. If you went back to the April contract, we were having a really hard time trying to move up here a little bit. And so now that, I mean, if you look at where we are in the April contract, let me just do that. This is what everybody's kind of used to looking at here. Ding, ding, ding. There we go. So this is, like I said, a 30-minute chart. Go back over here to this daily. They came up and they challenged this, 30-50 area here, and they just can't seem to maintain it. And now when we roll over to the next contract, which is at a premium, we just saw that it's about, $20 or $30 higher. We're going to be right back at that 30-50 again. So it's going to be kind of interesting after the end of this week. If you don't know how the metals markets move here real quickly, the last trading day, last business day, last trading day of the month prior to the month's expiration is what they call first notice date in gold and grains, in bonds. A lot of those markets are that way. And our last trading or our last official business day is next Monday, right? It's the 31st. So really, they're going to have to be out by Friday on this contract if they're long. Otherwise, they're going to get assigned, 100 ounces of gold or whatever it may be. There's a micro contract. You can get 10 ounces of gold, whatever. So they have to be out by this Friday. And otherwise, they're going to get assigned. So when they roll that contract over, and you can watch the volume on the either the CME's website. It's easier if you just go to barchart.com and just kind of look at the volume on the contract. but you'll see, in fact, let me just bring that over, just show it to you. Here is barchart.com. All right. And just if it's free, it doesn't cost you a dime. But if you just go over here and select a commodity, and we're going to scroll down and we're going to find gold. There it is. And you'll notice over here, there's a volume column. Now, on the volume column, notice there's 157,000 contracts on the April contract. Well, the next highest contract is 81,000, which is the June contract. Okay. So, but there's a discrepancy between those two, right there. This is at 3056. This is at 3027. So immediately it's going to get marked up, just like we saw in the S&P when we rolled over a week ago. We marked it up. And so it was marked up about 50 points in the S&P. Now we're marked up about $30 here in gold. So when we come in next week, we're going to be looking at a gold price that is basically $30 higher than where we're at. And now, does that move GLD that much? No, it does not, unfortunately, right? But that's just the way it's going to be. Now, the question is, do they bring back the June contract to this level of 30.25, basically, just to kind of say, now we've reconciled and now we can move anywhere? Or they try to get the April contract back up to that 30.50 area, which it can't seem to get above. And then we get to see what happens from there. So that's the thing about futures. You've got that front month that everybody looks at. And so it's just going to be kind of a weird time between the end of this week to the beginning of this next week of what that's going to do to the gold market. So we'll just see what happens. So another thing that we're also seeing is an energy sector that everybody has seen crude oil down. Crude oil is down just as much as the S&P is, or down around 3 or 4 or 5%, whatever it is. In fact, crude oil is down 4.19% for the year. You got the S&P that's down 2% and the NASDAQ's down 4%. So, but one thing that's really interesting, if you look at this little page here, my little pen here, if you'll kind of look down through here, that right there is gasoline, and this is natural gas. Gasoline's up almost 10% on the year. Pretty substantial, right? With crude oil down 4%, gasoline's up 10%. Of course, you got natural gas here that's up almost 4%. And this is old heating oil here. It's down just about as much as crude oil is. But with gasoline pushing up and everything like that, and natural gas pushing up, you've seen a lot of the energy guys actually up. And if you look at actually the best performing sector on the year right now, it's the energy people, which is kind of different. Everybody thought, well, it's going to get, be dying off and this, that, and the other. So when we look at that and come back over here, this is good old XLE. And of course, everybody kind of thinks of XLE being the, energy sector ETF thing, which it kind of is. But you notice it opened up the year here at $86. And I'm looking right here. So it opened up the year right here at $86. And we're currently trading up here at $93. So it's moving up with what gasoline and natural gas are doing, if you want to look at it that way. So it's actually been fairly strong this year, even though it's dipped off and stuff like that. And it kind of still moves along with crude oil a little bit. But the energy markets are actually kind of outperforming everybody else right now. And the oil guys out there really don't want to, drill baby drill just because they like crude oil where the price where it is, so they can still make a lot of money off of it. And of course, we're going to get the EIA petroleum status report out tomorrow, so we'll see if this bumps it up some more or kind of pulls back. We've seen a little bump up in crude here over the past several days. And let me clear all this out, bring up that. This is the daily, right? Right. And you kind of see here over the past 4 or 5 days, we've had this little bump up in here in crude oil coming off those lows, kind of like the S&P, right? But of course, I say they, are tearing up the Gaza Strip again. Um, of course, Putin agreed not to bomb the energy infrastructure of Ukraine. Yay. But we've also got more sanctions going out on China. And the thing about sanctions is that uh, it's kind of a different way of looking at it. But countries out there that know that they're going to have, I say sanctions, tariffs and stuff like that slapped on them, they're going to try to do as much as they can before the tariffs hit. And so that's why you've seen uh, there we go, copper take off. This is the copper market. Um, and right now we're trying. In fact, we're up here at 521 now. I've been watching this 515 area just because it's been a big resistance point copper. Right now we're at 522, but it's been moving up because everybody is shipping all of their copper to the United States as much as they can and just blowing off the rest of the world. So the rest of the world out there has a shortage of copper. London has one of the biggest shortages in copper it's seen in a long time. And so, and the reason for that is everybody's shipping it here before the tariffs hit. So the United States is going to have a lot of copper. How's that? But the rest of the world's not. So copper demand around the world's been pushing up, and of course, this is high grade copper right here. And we've just been seeing copper just kind of move up, move up, move up, move up, and now it's making new highs, just like gold's making new highs right now. I'd like to see silver kind of come right back behind that and get back above 35 bucks. That would be really nice. But it seems to be the weaker of the three. But anyway, I will consider still think that it's going to move moving higher. As far as looking at other stocks and things with the energy sector being one of the strongest, there's actually quite a few stocks you can look at in the energy sector. Um, I mean, if you want to kind of stay more toward the natural gas, One Oak is always really good. You can kind of see it's pulled up from 87 to 102. Nice little rally in that, right? And so I think a lot of these that have kind of bottomed out, one that I have a tendency to like a lot, I think I like the name more than anything, is Fang here, is Diamondback Energy. Um, but they've come from 137 up to 161, up 30 bucks from that little low down there. And they have some room to move. Um, and I've actually kind of gotten into a kind of a longer term spread on them. And I think that if you can get into like a 160, 180 call spread that goes out, to probably June, you'd probably be looking okay on that and just kind of hang on to it for a while. I think Fang, if the trend's going to continue here, we should see Fang probably get up to, the 180-ish area. You can kind of see that's where those highs are up in there if they want to challenge that. Even if they get halfway there to 170, I mean, I'd be happy with that. Just kind of giving it some time and some room to get in there. I mean, we've done really good in our energy income trader, working on XOP and stuff like that. If you're in that program, it's a really easy way just to kind of take advantage of the week by week moves in the energy sector. But I think this is kind of a longer term kind of look at it. And there's quite a few of them also like this Anero resources here. It's actually popping new highs, as you can tell. Or Antero, it's one of those. It's AR. But and it's a cheaper stock, but I think it's probably one of the better ones that are out there as well. You can kind of see we opened up the year at 36 bucks and we're at 41. And I think it has some room to move as it kind of pops these new highs and kind of moves on up. So just some, ideas for you if you're wanting to kind of play on the energy side of things. Copper is doing well enough. If you want to look at Southern Copper, SCCO, uh, in here, there we go. You can kind of see it's breaking out as well. This is Southern Copper. Of course, there's always the the main staple in there. Was it FCX, Freeport McMoran? It just gets whipped around a lot. So even though it's like a $41 stock, they can take that thing down to $30 and they can take it to $50. So it's kind of right in the middle of that range right now, but that thing just kind of moves quite a bit. And you can kind of see, Southern Copper kind of does the same thing. But I think right now copper's going to be continuing to move higher, especially if we get manufacturing and everything back. I mean, they just announced that, what was it? Hyundai is going to invest whatever $100 billion in putting a steel plant in, what was it, Louisiana, wasn't it? So there's a Hyundai plant up around Tuscaloosa, Alabama. So if they put a steel plant over there, I guess that'll help them out some. So, but anyway, but I think those are some things to just kind of look at um, going into the next couple of weeks here. Of course, we'll be back on Thursday, and of course, we're here a couple of times a week just to kind of analyze things and kind of keep an eye on things. But right now, we're going to have this gold, rollover, if you will, from the April contract into the June contract, and it'll be interesting to kind of see how they reconcile those two contracts to each other as we kind of go forward. I mean, we're going to get marked up regardless, but now the question is, do they correct it back or do they continue to push it on higher? So just kind of keep your eye on that a little bit. But if you all have any questions or anything like that, feel free to ask. Otherwise, we will kind of see how these markets kind of churn out as things are trying to push up here a little bit. How long does it take? Usually it doesn't take very long. I mean, they'll take care of it in a couple of days, Barry. It's just like the S&P. I mean, when they kind of went through those, to the reconcile those contracts last week, they kind of dumped off a little bit one day, and boom, they were calling it good, and off they went. And it's kind of weird how they'll do it sometimes. Sometimes they'll just go out and test the week open, which is what they did in the S&P. They sold the other one, um, pulling back, and then they flipped that thing right back around once they hit the week open, and they just took off again. So you're probably going to see something like that. I mean, we'll just kind of take a little bit of a haircut in our gold programs for a day or two, but I think after that it's just going to get, I mean, it'll continue to move on up. And heck, they might just do it the other way around. Um, the They might actually bring the April contract back up to the 30/50. So that's what you don't know. You don't know if they're going to take the April contract up to where the other one is, or take the other one and pull it back down to where this one is. See my point? And that's why it's always best just to kind of let that happen and see which direction they try to take the thing. Um, so, but we'll continue to kind of look at things here, and so, but I mean, we'll hold on to our positions in there, and I think everything will be fine. Sometimes those positions actually, get a little, little hot sometimes. People don't like the heat in the kitchen at times, but just get a fan and blow the heat out. It'll reconcile itself. We'll be fine. I'm pretty sure. So, but anyway, yeah. But we'll hold on to them, Elisa. We'll be fine. Uh, SPY capitulation. um, you know, I think the markets they've had their 10% correction. There it is. And like I said, I mean, if they're going to correct the market the first quarter, brand new administration, they're probably going to take it down into March. We've seen that. Now they've already started bouncing this thing back up. And I think as more time comes in, um, people will get a little more reassured. And that's the problem with the market. It doesn't like uncertainty. So as they're getting more and more confidence in the current administration slash economy, whatever it may be, and I'm sure there's still going to be some spaghetti slapping against the wall somewhere that's going to shake things around a little bit. And everybody's still trying to figure out what's going on. But I think for the most part, they'll continue to kind of squeeze this thing back on up. Now, do we make new highs in the S&P? I don't know about that. Like I said, if we get back up to that 50% retracement, now they got a kind of a line in the sand to say, okay, do we really want to be positive or not? And one thing that's really interesting about that, let's go back to that real quickly. When you asked, uh, so you have to kind of look at where things started out a little bit. And we opened the year on this contract at no, basically 6,000, which puts you right in here. All right. And if you look at what we were just looking at here, let's go back and just one of those. Just kind of draw this back out a little bit. Zing. There we go. Your 50% retracement is at 5,900. So even if they take this thing back up to the 50% retracement-ish area, they still got another 100 points before they even get back up to the year open. So they could bring it up to this 50% level and say, okay, now we bounced it. Now, if they take off from there, they'll probably go challenge that year open. If they don't take off from there, they might come back and retest back down into here somewhere, and then kind of flip it back around and go. That's the question mark, and we'll just have to see what the news is and what time allows for that. And but I would be, you know, probably pretty. I don't know. I'd say I'm probably 70% more positive that we're going to get to the 50% as opposed to pull back from here. I'll put it that way. Now, do we get back to the year open? That's the big question. I mean, remember, they opened the year at a specific price. All right, there it is. If you look at the contract that we started out on, it was basically 59.49. And if we get back to that, now they have to make a decision. Does the year need to be positive or does the year need to be negative? That's the question. I mean, that's basically what the year open says. We're above the year open at the end of the year. What? We're up on the year. We were up, what, 23, 25% last year on the S&P. If we're below that, they think the economy is going to be doing worse. So is the economy going to do worse or is the economy going to do better? And that's what that year open is going to determine. Now, we were above the year open for the most part until basically we got a week or two past the inauguration, and then they just kind of started selling things off because all the tariff talk. Well, he's already been talking about that. So I think that was just an excuse to sell it off. And now they're flipping things back around here. But the real question is, do they get it back above the year open? And if they do, that means they think the S&P into the future is going to be more positive than negative. So, but anyway, Donnie, you can go to prosperitypub.com/Geof Smith and you can find all the stuff there. So, but anyway, there it is. And I'll type that in here. Ah, there it is. Dakota beat me to it. So, all right. Well, thanks for being here. We'll be back on Thursday and see where things are at. So, y'all be safe and we'll see you then.